Everybody, welcome back to the Mustard Seed podcast. This week I have on Christian Catalini. How are you doing, Christian?
I'm great. How are you, Joe?
Doing good, doing good. I know you founded the MIT Crypto Economics Lab. I'm curious, what is the purpose of this lab and what is crypto economics?
Yeah, the lab was founded many years ago as a result of an experiment that we designed between 2013 and 2014. Together with some students at MIT, we distributed what at the time was about $500,000 in Bitcoin. So every MIT undergrad back in 2014 received about a third of a Bitcoin. Of course, that's worth approximately $40,000 or so these days. So a lot more than the $100 that they received. We wanted to study, what happens when you give a bunch of smart kids access to Bitcoin. What would they do? What do they, build with it? Of course, it was extremely early. The majority of students back then decided to hold on to their Bitcoin, which turns out was the right choice. Some of them had the most expensive sushi lunch of their life, probably, because one of the few locations that accepted Bitcoin back in 2014 was a sushi restaurant in Central Square, close to the MIT campus. But overall, it was a really interesting experiment in terms of pushing the boundaries of what people are comfortable with when it comes to new technology and seeing how they react. Again, I think most MIT undergrads at the time passed the test. I still receive every now and then emails from students saying, "Hey, I paid my tuition with it. It was great." Or, "I'm still in crypto. I'm building because of that." So in a sense, I would say the measure of success of that research study is a lot more in how many minds have we inspired, how many minds did we get on the trajectory of learning about crypto and building something in it back then.
Yeah, it's very cool. I'm curious to hear your perspective. Would you say that you are a Bitcoin maximalist or are you crypto agnostic?
I'm definitely a Bitcoin pragmatist. I do think Bitcoin has a very special role within crypto, one that is very difficult to replicate. The genesis and history of Bitcoin is really unique. And I think it's extremely hard to recreate that in any other form. I mean, we're seeing a lot of interest these days in corp chains, and it's kind of fascinating, right? So if you think about the history of technology, Bitcoin sometimes feels a bit like Linux. When Linux came out, you may remember Microsoft called it a cancer. And most people said it's a toy. It will never be ready for prime time. It can never work as a mainframe. It can never work and be as reliable as proprietary solutions. And now you're all, many years forward, and that open source project, despite starting and looking like a toy, powers like 90% or so of the cloud. I think it powers about 100% of the top 500 supercomputers on the planet. And even Microsoft had to walk all of that back. And it's using Linux aggressively in the cloud. I think something similar is going to happen with Bitcoin. People always looked at Bitcoin as this network that, okay, it's digital gold. It's really unique. It's special. We all care about it, but it cannot scale. It will never cross into the mainstream. You should not try to do payments on Bitcoin. That's why we have new chains. And, there's a whole long tail of them that I don't think will be ever remembered. But I think we're coming around to the realization that, first of all, network effects in crypto are extremely strong. And so I think there's probably one, maximum three networks that will be relevant in the future. Definitely Bitcoin is the first one that I've set. Ethereum serves an important role also because of different choices that it has made over the years. Maybe Solana, but after that, it's really kind of, no man's land. And most developers, most builders have been concentrating, of course, on EVM because it was easier to build on. I think that's changing. So finally, we're coming around after, the grueling years of Lightning, which, was a toy for many of its early years. When we started Lightspark back in 2023, essentially, we were looking at Lightning and it was very clear to us that lots of potential, lots of upside, but really not enterprise grade. A year and a half into the journey, we made Lightning, I think, truly enterprise grade. And now 15% of Coinbase Bitcoin transaction is on our Lightning stack, which is really impressive. Nice. It's growing organically, works really well, custodial to custodial. But of course, the next frontier is how do we close the gap with EVM, with Solana? How do we allow non-custodial at scale on Bitcoin? I still remember the days where, I was teaching crypto and Bitcoin at MIT, and we would send around, tiny fractions of a Bitcoin to just show how it works. Show, here's the block explorer, here's your transaction. You can't really do that anymore, right? It's kind of expensive. But I do think as we lower the cost of onboarding new people to Bitcoin, it's going to be truly magical for people to see, hey, I can own a few sats. And maybe it's not economically meaningful today, but maybe it's my kind of saving stash, and I can see it. You can look at it, appreciate over the years. So interesting times in Bitcoin, definitely.
Yeah, I want to dive deeper into what you guys are doing at Lightspark and kind of how you think about Lightning. I guess, but first, before we get into Lightspark, like what were you working on before Lightspark?
Yeah, so I was originally back in 2013 a professor at MIT, right? So very much an academic. I'd been studying the economics of anything that potentially could, democratize access to financial services. So for a while, I was really deep into crowdfunding. I actually studied the first crowdfunding platform on the planet, which was a Dutch platform nobody remembers anymore, back in
Hmm.
2006 called Salaband. Then, of course, studied Kickstarter and Indiegogo, so kind of reward-based crowdfunding. And from there, I got drawn to equity-based crowdfunding because to me that was the next step, right? Can we found new ventures? Can we bootstrap new ecosystems? So that was the days of AngelList and all those folks, Naval and Kevin
Yeah.
Laws. And that was kind of an entry into crypto, right? So when I discovered Bitcoin, I remember going to my academic advisor and saying, "Hey, we're studying crowdfunding, but this is even more powerful. This is even more interesting." And he was like, good advice at the time. He's like, "Hey, focus on your job market paper, get a job first, then you can go back to this," which is essentially what I did when we did the Bitcoin experiment. But for me, Bitcoin and crypto was really a continuation of a research trajectory on like society can do much better on payments and financial services. We're very lucky in the United States, right? We have many ways to pay, we have many ways to save, we have many ways to invest. We're definitely not unbrokered or underbanked or unbanked. I mean, some segments of the US population are, and so there's still progress to be made even at home. But it's still an exceptional country. And so we tend to forget that in pockets of Latam, Asia, Africa, people just don't have access to, first of all, a stable currency. And I think that's what we've seen with stable coins like Tether being the first entry point into anyone holding something that looks like a dollar. Second, I think we're going to see people eventually being able to borrow and lend in a new paradigm. And also then invest, right? So if you think about how many people don't have access to the US capital markets, to the ability to really work hard, save, and see that saving really grow over time. So that's kind of what draws me to this space. And I think, slowly we're making progress. It's taking way longer than I would have expected back in 2013. In fact, when we did the Bitcoin experiment, we wrote something along the lines like, this is going to inspire all sort of entrepreneurial new invention, and people will kind of build all this future very quickly. I was very naive. And then from there, of course, Libra. So
Yeah.
David, who at the time was leading Messenger, invited me for a research trip in Menlo Park. I thought it was just a research trip. It was more like an interview loop. By the end, he was like, "I'm going to ruin your academic career. Come build, this new secret project that we're just starting." So I became one of the founding team members of what became the infamous Project Libra. We learned a lot. We made a lot of mistakes. We tried to scale stablecoins at a time back in 2018 or so when it was very premature. Also from a place where if we were allowed to launch, we would have brought stablecoins to 3 billion people, and we had 24 members that were impressive, right? From the Shopify's and Ubers and Lyft to the PayPal's and Visa and MasterCard of the world, really like the new technical stack for payments and finance. But of course, regulators were very concerned about that. Incumbents did not want that innovation to happen. I think by now they've come to the realization that they can't really stop it, so they have to embrace it. So we're in the, they stop fighting you, they start joining you phase. But yeah, with Lightspark, it's kind of a continuation of that journey, and especially a lot of the learnings from Libra.
Yeah, it's very interesting. The story behind Libra is fascinating. Like if Libra was around today, do you think it would be succeeding?
I think it could have succeeded. I'm actually glad that in the end it didn't. I think we can build something even better, especially if we build it on top of networks like the Bitcoin one, and we really, commit ourselves to only building on truly permissionless and decentralized networks. I think that's probably the most important piece to retain the soul of crypto and its potential to actually change the system and improve people's lives. If we end up just switching from the card networks to a giant corp chain, and we're seeing many of these, right, from PSPs to stablecoin issuers, everyone trying to tie the asset to their rails. To me, that's so antithetical to why I'm in this space. In a sense, we're not here to recreate more fragmentation or to create a better empire. We're here to really change the nature of how values is exchanged. Value should be exchangeable in a fully interoperable network, a network that doesn't have a king, a network that doesn't prefer some traffic versus the other. And so that's why we're building on Bitcoin.
Yeah, I love that. That's a great mission, and very aligned with the core Bitcoin ethos. I'm curious if you have a strong perspective on this, and it's kind of a different topic. But given your background, thinking about and studying crypto economics, a common topic that's been around, I feel like forever since the history of Bitcoin, is like what happens when the block subsidy eventually dwindles down to zero and the network, continues existing on transaction fees alone. Do you have like a strong opinion on how that's going to play out and whether that's a problem, in the future, or whether that's not something to worry about? I'm curious.
I do. This is one of those areas where I think economists and computer scientists disagree. And I've talked over the years to many computer scientists that are extremely worried about that. Of course, the security budget is important, right? And I think as new technology comes along, as transactions move to L2s, all of these L1s will have to think thoughtfully about how do we ensure that not only L1 security is protected and maintained, because of course, without L1 security, why even bother? Your L2 is just a fancy database. But more broadly, how do we ensure that innovation can happen as close to a one as possible? But of course, it will migrate up, right? Sometimes people more on the maxi camp will say, hey, scaling is bad. Scaling brings in some degree of trust. And of course, opcodes in the land of Bitcoin are always controversial. Eventually, I think we will get more flexibility. But look, there's a lot that you can do in a trust minimized fashion already with what's available today. I think in the end, the security budget will not be a concern because people will have a thoughtful response to whatever scenario we're in. And so I'm kind of confident in our ability to adjust, respond, and really come up with good solutions. At a very high level, if you think about it, the L1 will always be the core settlement layer, the one you really care about if you want maximum base layer neutrality, maximum censorship resistance. If you need to move significant value, that's where you're going to be. And you'll be willing to pay for that, whether it's through a fee or some other mechanism. Right now, of course, it's subsidized. At scale, of course, high frequency transactions will move somewhere else. And those L2s will have to be mindful. How do they contribute to the underlying safety of their L1? So it's a symbiotic relationship. I think we will figure it out. And again, I think sometimes people tend to worry about problems before they even know the contours of them. I have faith that good market design can solve this. This is not a complicated issue. Of course, you could land in a bad state, but then the community has to come together. The core developers have to come together and solve the issue. Thinking about it too much top down, I think it's not very Bitcoiny.
That's a really good point. It's like it's something that could be an issue at some point in the future, but we don't even necessarily know if it is a problem at all. We may not even have to think about it in the future because it just continues working potentially.
And all the other major networks are struggling with flavors of that same situation. Look, can you force transactions on L1? You can't, right? Because eventually, imagine the extreme, right? Transactions that belong only to one financial institution. That financial institution will not put them on L1, right? They will be in some form of scaling solution where you do trust them anyways, maybe because they're a customer, and that's completely fine. And that's where I think we need to be pragmatic. I think we want an ecosystem that supports all types of experimentation, all types of valuable economic activity. It's very difficult to say top down, this is valuable, this is a Bitcoin payment, this is not a Bitcoin payment. And I know it's controversial and some people get very agitated, but the ethos of Bitcoin is, okay, let's keep exploring carefully, thoughtfully, with minimal changes. And I was actually looking at, the recent history of soft forks versus hard forks. Of course, Bitcoin never really hard forked, right? At least not intentionally. There were some short moments in time where it hard forked and it was briefly corrected. But the culture of an upgrade should be a soft fork, and it should be backward compatible, and you should be thoughtful with those changes. I think it's one that lends itself really well for the future of money.
Yeah, it's a great point. Given your tech background, I want to ask you about your general thoughts on AI and AGI and maybe how it ties into Bitcoin at some point. But like, given everything that's going on with the market, Nvidia, OpenAI, AMD, so on and so forth, how are you thinking about AI broadly right now?
I mean, so many thoughts. We actually wrote a recent piece with Kevin Zhang, who's also at Lightspark, and Jay Wu, who's a professor at UCLA, really trying to unpack what will AI replace versus not. Because to understand what role crypto can play in it, I think first you have to answer the question of like what will be not automated. And our conclusion in that piece, just to summarize it really briefly, is that fundamentally anything that can be measured, anything that has really robust numbers behind it will be automated. We've seen it before from things like text, of course, where you can measure a lot, to self-driving, where if you have enough vision data, you can replicate that behavior. But the arc is very clear. You can throw more compute, assuming you have really good measurement, and then have the machines take that over. So what does that leave for us humans to do? It's really the land of the unknown unknowns. If you think about financial markets, a machine will have a very hard time predicting the state of the financial market in the future. Because there's all sort of regime changes, there's all sort of unknown unknowns. And sure, assuming you can measure everything in the universe, maybe you can have a perfect prediction, but we're far from that. And it's not even clear that quantum computing could bring that, although it, of course, would accelerate dramatically how much we can plan forward. So if you think about the role of crypto and AI, what's super interesting is that as AI replaces more of what can be measured, of course, massive challenges for labor, because a lot of work that used to be human will be automated. And humans need to move up the value chain on things that require judgment, on things that require taste and creativity, on things that are really difficult to measure. And a classic one, again, is the counterfactual thinking. What if? The unknown unknowns are something that our brain has been kind of wired over centuries and centuries to deal with. It's our superpower as a species. I think we still have a bit of a hedge. And then eventually, of course, once you hit ASI, well, all bets are off and who knows what happens. But what's interesting, at least in this intermediate phase, is that take agentic behavior. There's all sort of hype about the behavior of AI agents and what they will do and what they will not do. Should we give them a wallet? Should we not give them a wallet? But if you take a step back, what's kind of interesting is that LLMs are probabilistic. And now there are some teams that are doing work to try to make them more deterministic. But fundamentally, giving your AI agent a wallet is a very bad idea. Now, it can be fun for kind of memes and social interactions and entertainment. We've seen all sort of interesting things happen when people have given Bitcoin wallets, right, to things like agents that have a social account on X. But in reality, I think the strength of crypto plus AI is really that crypto is deterministic. And so if you can start wrapping these AI agents, not only with the safety guardrails that all the AI researchers and engineers are working on, but also with crypto primitives, now the blockchain, the programmability around it can really constrain them. And I think that's going to be kind of a superpower. Then there's the obvious stuff, right? If I'm an AI agent, I will need to micropay for things. I don't have any cognitive costs, right? So people keep saying, why don't we see micropayments? It's because our brains are really not good for it. Imagine having to think every time you read a page, okay, do I really want to keep scrolling or not? That's infinite pain for a consumer, but zero pain for an agent, right? An agent can go into very complex negotiations. It can think about all sort of micropayments at no cost. It's just compute. So I do think we will see micropayments with agentic behavior. Crypto is great for all of that. 24/7, global, always available, instantaneous, especially with scaling solutions, right? Like Lightning and also Spark. If you place that all together, I think you're already seeing it, right? So Cloudflare launched their own approach to this, kind of being the front page of the new web. Of course, these LLMs are essentially breaking that link that Google and many others have subsidized for many years, which is you create great content on the internet, Google drives search and drives you traffic, you monetize through ads or referrals. If people don't even visit your website or your content directly but get summarized in an LLM, that link is gone. And so Cloudflare, for example, is experimenting with this idea that, okay, can you pay per crawl? Can you pay per use? Can you have an agent kind of reward the content creator in a different model? I think it's super early days. I think crypto will play a role in it. And in fact, you've seen Cloudflare embrace X402. We worked on making, for example, Bitcoin compatible with X402. We think some agents will want to transact in Bitcoin. With Spark, we can also have stablecoins on Bitcoin. So, I think there's going to be an array of different solutions. But what's interesting is that Bitcoin is closing the gap with Ethereum, with Solana, with all of these networks that have been allowed to experiment much faster because we're more flexible to begin with.
On your point that you had of all things that can be measured that could be automated potentially by AI, where do you think we are on that, journey to having so many different things automated? Like, is the current phase of AI accelerating, exponentially? Is it going to like plateau for a little bit and like we're maybe like bubbling and then we're going to realize there's some other things we need to figure out before we really start automating a lot of things? Where do you think we are in like the current stage of AI development?
We're definitely not in a plateau. I think the current scaling law seems to be sound, despite some disappointment when new models come out and people expect like massive leaps. To be honest, sometimes these models get better at very specific niche dimensions, right? So unless you're really testing those, you may not even realize how far they're going. I think even if the model were frozen in time today, the impact on the economy is going to be massive. I think there's a number of jobs that are going to be automated. Alex Rampell has this interesting concept of like, hey, we're moving from essentially software as a service, which is the last few decades of SaaS, to labor as a service. Those same companies that offer those services will be able to provide, a digital worker of some sort, whether it's customer support, kind of the obvious initial stuff, to much more nuanced processes and flows. I think those jobs are going. And so as a society, we'll have to think thoughtfully about what's the plan, right? Do we retrain people? Do we push them to move up the value chain? There's going to be massive dislocations. And I think, again, even if the technology were to stop today, the impact is going to be massive. The reason why you're not seeing it yet is because, like any technology, think about the internet, it takes years for it to kind of percolate through society, for people to learn. Of course, some top early adopters are already using it in all of their flows and getting super productive. You'll see kind of almost a split. For some individuals, these tools make them like superhuman, super productive, and they'll have a few years where they can really do well. But over time, these models are moving up, right? And so at some point, they'll start encroaching more and more into what we do, and we'll have to really move up the value chain ourselves. I think it'll make us discover a bit more what it means to be human. Hopefully, we still have a few decades ahead before we're fully replaced. But I do think it's going to be a pretty seismic shift, just given the capabilities that all of us have, at the touch of a chat button.
Yeah, I completely agree that it's going to be a massive seismic shift, especially at some point. Like, what do you think is going to be the biggest challenge for humanity? Is it going to be like an economic challenge with, dislocation in the job market? Is it going to be like an ethical challenge with like people, again, I guess potentially people losing their job? Like some people get really wealthy, some people like don't have a job or whatnot. It's like a political challenge, is it another challenge? Like, how do you think about the change that we could be seeing shortly?
Yeah, I think there's scenarios where we will have to reinvent how capitalism works, and there's only bad solutions, right? Because to date, I mean, if you look at the history, it is the best economic model that we know that works and rewards innovation and entrepreneurship and all sort of good things to society. It is also the mechanism that has lifted everybody up. If you look at least at aggregate statistics, of course, it's not perfect, and there's all sort of side effects. But in aggregate, I think it is the best, no model. So what is the new model? I don't think we know, and I don't think there's enough economic research on that. So understanding that is going to be a really important task. And then beyond that, I do think that, and this relates more to AI security. People often worry about, okay, we're going to have like some super evil corp. I don't know if you watch the series Mr. Robot, but like E Corp type entity that will have so much power, so much compute, so much advantage in their models that they'll control it all and they'll be nefarious. I think the future is likely to be a lot more boring, but still very dangerous, which is if you look at LLMs, economists tend to think about some of these problems in terms of preferences. Humans have certain preferences. Those preferences are really expressed in their actions. you can tweak the incentives, but ultimately those preferences shape how they will respond to those incentives. I just think about the history of Bitcoin. Somebody, he, she, they, whoever Satoshi was, a group, a single person, released this code on the internet. The code had some invitation to provide security to the network, and many years later, we have massive decentralized infrastructure all over the planet, right? So now take it to the machines. I think we still don't understand these models well enough. Sometimes they have very weird preferences, and we were able to reverse engineer them, like maybe in GPT-2 or 3, still because they were very simple. There's all sort of anecdotes where maybe Anthropic trained it on, I think it was on the Golden Gate Bridge, to see what if we make a model obsessed about an object like the Golden Gate Bridge. But the reality is that when you open the box of these LLMs, they do develop some preferences, and we don't fully understand them. And so I'm a lot more worried about safety from the perspective of like we created something that has some preferences that we do not understand, and that preference just materializing could have a massive ripple effect on us, including eliminating us, not because it's malevolent, but because it's just following some process that we don't know and understand, and we're just a casualty on that process unfolding. So I think that's probably the biggest risk, which is almost like there's some weird side effect that we cannot predict. And for sure, there's going to be side effects. Hopefully, we can contain them. But when that happens, and especially when it has enough power, when it is embodied in robots, a lot more dangerous, right? So if it's in a data center, maybe there's a big red button, unplug the whole thing, and we're back to the pre-AI age. But if it's robots embodied, very, very difficult to control.
Yeah, it's going to be fascinating. And like, I feel like the pace of how fast everything is changing and how fast it really could change like over the next few decades is kind of cool, but also a little bit terrifying. Where do you see like Bitcoin or money playing a role in the world, in a world where like nearly everything is automated and everything's kind of falling to the marginal cost of production, which potentially could be falling in of itself? Do you see it? How do you see this kind of playing out in regards to Bitcoin and money?
Yeah, a few thoughts. So first of all, Bitcoin is digital scarcity. And so in a world of abundance, that seems interesting as a concept. But regardless, no matter what will be abundant, humans love to play all sort of status games. So we kind of almost recreate our own dynamics and our own scarcity, no matter how much abundance we have around us. Now, it is true that if AI unlocks, infinite energy, a lot of the constraints on humanity will be lifted. But then we'll get also more ambitious, right? We want to travel the stars. We're going to want to do a lot more anyways. I think at a high level, and this was a tweet that you had picked up on a while ago, I threw out this provocative thought of like, how do we get to alignment, right? And something interesting that came to my mind, and again, this is really just a wild idea, is not really a well-formed economic thought, so take it with a grain of salt. But fundamentally, proof of work is a way to trade the future for the present, right? So it's almost like saving. You're taking energy, you're recording it into this ledger through proof of work, because that's the process that secures that ledger. And in the future, of course, as long as society believes Bitcoin has value, you can take that energy sort of back. It's almost like this battery that some people have defined it as. Of course, it's very different than a physical battery, but there's something magical about society deciding, okay, at this time I want to save, or an individual deciding this time I want to save, and then later being able to convert that back into value. Now, maybe we need something similar at scale for these AI models, right? Which is like, they will need energy, they will need compute, and maybe the way we keep them in check is by pushing everything into Bitcoin at the times they're not aligned and giving them energy back if they're more aligned. I think this will require a lot more work and research, but maybe there's something there. We will see.
Yeah, that thread was really interesting, and that's for people that don't know, like that's kind of what sparked part of this this podcast. I kind of wanted to get your thoughts on that, which is cool that we got to talk about it for a little bit. But yeah, I feel like it's fascinating to just think about how this is going to play out, because like you said earlier, like there's so many unknown unknowns. Like things are changing so fast that it's basically impossible to predict how this is going to play out potentially.
Yeah, and look, I think the other challenge is also that, of course, there's geopolitics involved. There's a race between the U.S. and China. You have open source, I think, has a very strong counterbalance here again to just the closed proprietary models. It's been great to see that open source has been able to catch up and continue to advance. And researchers have been very clever at using less compute. I do think that as much as, sometimes people say, well, we shouldn't have models as open source because they're dangerous. It's again a very similar analogy to when people were saying Linux is dangerous and therefore you should just use proprietary software. I think we need all our smartest brains trying to solve AI safety and security. And maybe crypto will play a role in rewarding that ecosystem, especially in an increasingly multipolar world where Bitcoin can be almost like the lingua franca between different currencies. Who knows? Like you said, there's a lot of unknowns, and it's both terrifying and really exciting to be in the middle of it, right? So we've witnessed the internet, or at least some of the tail of the commercial internet, and now we're witnessing another revolution, which probably is going to be larger scale than the industrial revolution. So yeah, P-Doom seems to be pretty high, but even if you listen to some of the smartest guys in this space, like Jeffrey Hinton, which of course is the father of a lot of deep learning, I think his probability of P-Doom is 20-25%, which is insanely high. But then, yeah, again, if you think about it as the glass half full, we do have a great possibility to really lift up society and move into something much better.
Definitely agree with that. Do you think that AI is a bigger deal than Bitcoin, or would you say it's the other way around?
That's a difficult one. I think they will both be very important, and maybe, and this is just an intuition, they need each other.
Yeah.
I can't exactly pin it down. Maybe it's the scarcity to the AI abundance. Maybe it is the fact that, again, Bitcoin absorbs compute itself and stores it for the future. Maybe it is that we do need an asset that is not controlled by any single country, and that might be important in a period of heavier conflict. I don't know, but the two emerging and kind of graduating at the same time doesn't seem random, and so maybe we're in a simulation where they will both play an important role.
That's definitely possible. I want to ask you also more about the Lightning Network in particular. What do you think of the current state of the Lightning Network? We talked about it a little bit at the start, where early on it was kind of a toy. People were just messing around with it. To some extent, to me, like it's still kind of like, you can use it at Steak and Shake right now, which is pretty cool, and like some retailers, but it still hasn't really fully caught on, I would say. How are you thinking about like where we are with Lightning and where it could be in the future?
Yeah. So first, Exhibit A, right? So people don't want to spend their Bitcoin. We saw it in the Bitcoin experiment at MIT. Most of them were holding on to it. In general, if you believe in Bitcoin as a new construct, as this new scarce digital asset, and the network, right? So often people obsess about digital gold and forget that, hey, we have the first financial network that's really decentralized and that can support all these new use cases. I think that's going to be a bigger deal, by the way, in the long run, in terms of the value of Bitcoin. I recently wrote a piece in the Harvard Business Review trying to really unpack where does the value of Bitcoin come from. People obsessed about the short-term volatility, and again, plot the graph of the Bitcoin price on a log curve. It's a very clear pattern, right? Yeah. So I do think that's going to be a really interesting trend to watch. But when it comes to Lightning, again, if people don't want to spend Bitcoin can still serve as a global 24/7 settlement asset. Now, most people will say these days, especially with all the hype, that's what stablecoins are for. And look, we tried to build probably the largest stablecoin ecosystem on the planet back in the Libra days. But stablecoins have a single throat to choke. Stablecoins have a single platform architect. And you're already seeing all these stablecoin issuers trying to tie it to their own rails. That's the same wallet garden that we had in the past with the card networks, right? There's nothing new there. I think stablecoins are an important step in this evolution and will play a role. But when you think about, moving value between two countries reliably with deep liquidity, actually Bitcoin is kind of interesting. You can, if you're a neobank, you can go to a market maker and say, hey, we're going to have uninformed trades. We're going to come and buy and sell Bitcoin from you in exchange for fiat. We're not trying to arbitrage you away. So it's almost like a PFOF arrangement, like pay for order flow, like Robinhood has with Citadel. they can get conversions to and from Bitcoin cheaper than they could go through a stablecoin. Also, with more stablecoins coming into the market and liquidity for stablecoin will fragment. And so Bitcoin, I think, will be way above the liquidity of any single stablecoin. So when you put that together, Lightning works really, really well for two custodial entities talking to each other, to neobanks, to banks, to VAS, to crypto exchanges. The problem with Lightning is it is capital intensive. I mean, we did all sort of improvements on the AIML side to make those payments, splice on one side, recompose on the other. So we've made Lightning more capital efficient. But in the end, channels are expensive. So they really only make sense, for a Coinbase, a Binance, a new bank, like large institutions that are trying to move significant volume. If you want to onboard, the next billion users, they're likely going to come online with non-custodial wallets. We've seen that already. Tether is that large because people want to hold dollars, and they often hold it in non-custodial wallets or wallets that are available only locally. To clear that gap, you need something better. And of course, with a new opcode, it could be much easier. It could be fully trustless. For now, the best you can do is kind of a typical one-of-n trust minimize approach. That's kind of what we built with Spark. Importantly, Spark also has unilateral exit, which we think is really key. You can always take your Bitcoin away. Of course, if you're holding a tiny balance, the cost of that one transaction may not be worth it. And so you may want to pool your funds with a friend or someone else. But fundamentally, we're trying to really combine the best of L1, the best of Bitcoin, the best of Lightning, by the way. Spark is fully compatible with Lightning, with something that can create a Bitcoin wallet at the touch of a button, at the click of an SMS. That's something we've been missing on Bitcoin. And of course, as much as some Bitcoin maxis will not want stablecoins on Bitcoin, why not? We should have all sort of tokenized assets on Bitcoin. They should be interoperable with Bitcoin. You should be able to go eventually from a tokenized stock share to Bitcoin. Markets may be denominated in Bitcoin in a few years and in some countries. So, why not? We need to embrace this. And that's kind of what Spark is motivated by. Lots more work to do to make it really robust and scalable, but it's a start.
What's the biggest challenge for Spark right now? Like, is it like the scalability of it? Is it just convincing people that, it's a good idea? Like, where are you guys now with that?
I would say there's massive interest by most of the ecosystem because, wallets want to bring back non-custodial Bitcoin. Exchanges want Bitcoin DeFi to live on Bitcoin. So I think the challenge hasn't been in kind of getting attention and getting enthusiasm. If anything, we're playing catch up with all the enthusiasm that's coming to Spark. I would say it's just, building on Bitcoin is hard. And so making sure that it's secure, reliable, that it can be really the best performance without compromising on anything else is the main challenge. So our engineers are, really burnt out, working super, super hard to bring this to market and help many of our partners that, want this today to have it as fast as possible.
You also mentioned earlier, like a different or an additional opcode could make potentially Lightning more scalable or better in one way or another. Can you kind of elaborate on your thoughts there and like where you might stand on, the future of Bitcoin development?
Look, I'm not an engineer, so I'm going to refrain from embracing any single opcode. But what I will say is more generically, I think there's multiple opcodes at this point that would make Bitcoin a lot more flexible and a lot more safe. I think there's a few of those that could make Lightning more performant. There's some that I think would enable things like Spark to be fully trustless, which I think we should all want. So in a sense, I think the word of L2s is undeniable. I think Bitcoin core developers should think about what is the simplest, most basic possible upgrade that can bring interesting things that relate to privacy and scalability so that Bitcoin can be truly modern. Again, I don't think it needs to be too complex. I don't need to, it needs to kind of hit 1,000 things at once. This might be a contrarian thesis, but like maybe we don't need to go all the way to full Turing completeness, right, through something like this. But can we get a bit more? Can we get a bit more juice so that we can truly onboard billions of people? I think that's still part of the Satoshi white paper, right? It was electronic cash, right, and peer-to-peer. We were losing those peers. And so I think, whoever is considering these opcodes should think, okay, what can we do to keep Bitcoin relevant? Because otherwise, honestly, and this is something that I wrote in relation to corp chains recently, many of us got into crypto because they do believe it can really democratize access to payments and financial services. It can really improve how we do what we do today. But the opposite scenario is also true, and AI is already a very centralizing force. You could see large payment service providers, large stablecoin issuers using AI plus crypto, maybe on their own corp chain, with great programmability, great functionality, great design partners like us in the days of Libra, essentially moving all of payments there. And then the case for why you actually need something truly permissionless will be lost until there's a major problem. I think that would be the hard way to figure it out, which is, okay, we all embrace a corp chain, it gets massive volume, it's sort of decentralized, at least on the surface. Then there's a real test, right? Then there's either geopolitical tensions or something that goes terribly wrong, and then we'll regret not having built it on Bitcoin.
I agree with that. Over the years, have you thought about building a quote unquote like purely decentralized stablecoin, or try to think about ways of how to do that? Like obviously Bitcoin is best, it's purely decentralized, but like even if you put Tether on Bitcoin, well, Tether, the company, probably still holds T-bills or some other asset in a bank account, or in a brokerage account or bank account or whatnot. Is it possible to build a decentralized stablecoin? Does it matter? Have you thought about it much? I'm curious.
Yeah, I mean, as you can imagine, in the early days of Libra, we thought about every possible model. We had the chance to work with some of the best economists on the planet at the time, and especially from a market design perspective, the holy grail of a decentralized stablecoin was something that we were really passionate about. After countless hours and discussions, our conclusion was like, there's no way to do it. And I think the basic intuition is actually quite simple, which is if you're trying to create a stablecoin that's truly decentralized, you're trying to link something that only exists somewhere else, like a US dollar, with some architecture of incentives or mechanism design. And that's not how crypto works, right? So if you think about Bitcoin, Bitcoin is the native asset of the Bitcoin network. It is created, maintained, protected by that network. It's self-contained. A stablecoin by design is not self-contained. Now, you can do all sort of things that are stablecoin-ish in flavor. So think about Maker, right? You're essentially putting collateral in, but the reality is that either it's going to be extremely capital inefficient, like you have massive collateral, over collateralization relative to what you're trying to do, or there's going to be risk. You can't eliminate that risk. And teams are very clever. They come up with all sort of mechanisms and taxes. And by the way, most of those designs are wrong. And in a crisis, they will just fall apart. We wrote a paper actually on how algorithmic stablecoin will collapse, I think about a year almost before the Terra Luna disaster. We shared it with regulators, we shared it with policymakers, we shared it with the ecosystem. Nobody cared. And then, things happened. So I would say whenever you see an algorithmic stablecoin, just realize that there's some degree of risk. And it doesn't matter if there's different tranches, there's all sort of sophistication. It's a bit like 2008, right? There's going to be edge cases where things will fall apart. So I think we should really honestly separate these two things. There's going to be native assets like Bitcoin, and there's going to be fiat-backed stablecoins where actually what comes out of the Genius Act is probably what you want, right? It's something where regulators will have oversight. There's regular financial institution issuing that token. The assets are boring, high-quality liquid assets, which was essentially Libra's design, and that's it. And those things will work for certain use cases. For others, you'll have tokenized money market funds and treasuries, all sort of financial assets. Tokenization, I think, is going to be great in general, but it's going to be different than truly native crypto assets like Bitcoin or Ether. So let's not mix those two. If you're creating a mix, be very transparent as a developer, as a founder, about what the risks are. Look, it's fine to have an over-collateralized asset that in most situations will be stable. But I think it's important for users to understand that it's not the same as holding a dollar. Because otherwise things will go wrong at some point and people may have put their savings into it without really understanding what they were getting into. So I think we do have a responsibility of bifurcating this much more aggressively.
Yeah, it's very interesting. Have you followed what Saylor has been doing with his different preferred equity products? And one is STRC. He's pitched it as like a money market equivalent that's backed by Bitcoin, which is not technically a stable coin, but it's he's kind of selling it like a stable coin to some extent. Like, are you concerned about that product in particular?
Look, I'm more concerned in general about digital asset treasury companies. And in fact, in the HBR article on Bitcoin, I do have a whole section discussing them. You might be correct that you should be long Bitcoin, right? That the overall price sequence is going to be up. Now, that's not investment advice, right? But some people believe that. The problem with these instruments is that you don't need to be only right about the overall ending. You need to be right about the exact sequence. And as we've seen before, Bitcoin can have massive drawdowns. There could be something that makes the community lose faith for some time. What is the technical challenge? I don't know. It could be quantum computing, and we have to change the signatures, or it could be some other attack, right, from a state actor, some other glitch. There's so many different things that probably will happen again in the history of Bitcoin. And that moment where you have that drawdown, if you cannot repay your schedule, the whole thing is going to come collapsing down. At the end, when you look at digital asset treasury companies, and of course the Bitcoin ones are probably less dangerous than some of the others, because the more you go on the tail of assets, the more this becomes insanity, is that what you're doing is taking massive leverage. In the end, it's a leverage instrument, and you should ask yourself, okay, but I can take leverage on an ETF, a Bitcoin-based ETF. It's not the same leverage. It's usually less than that. And so once you start looking at these instruments, all of them, all their flavors as leverage, you understand that there's risk. And so there's no magic bullet of like, hey, I buy this share in this company, and because it keeps accumulating Bitcoin and Bitcoin only goes up, I always get more than if I had invested on the native asset. You're buying into leverage, you're taking more risk, and I think people should be open-eyed about what they're doing. When you zoom out, I think the biggest risk is that if any one of these digital asset treasury companies comes down, which is definitely possible, the ripple effects on the ecosystem could be pretty damaging, right? Just imagine the headlines, just imagine regulators. We've been there before, right? With Terra Luna, with some of FTX. I don't think we want to go there again. And I think these instruments are probably the closest to something that looks like alchemy, and typically alchemy doesn't really work out.
Yeah, it's been a fascinating space. I certainly agree that the DATs that are not based on Bitcoin, those are absurdly risky. Michael Saylor is referred to as building with balsa wood instead of steel. Makes a lot of sense. But obviously, there's leverage involved. There's risk involved. So I think you make a great point there. Any like closing thoughts or the future of Lightspark? Like anything that the community should be aware of?
I would just say to all the builders and developers and entrepreneurs, trying to change the world, I think we're at a critical juncture. Again, the rise of these corp chains, I think it's a bit different than it's not about Bitcoin, it's about the blockchain of 2017. Those in this space for a long time have seen this before, and so they're like, oh, whatever, they'll just fail. I think this time is different. I think some of these chains have distribution, especially the ones coming from established fintech companies. And so if you believe that the future should be neutral, open, and permissionless, I don't think you can just sit on the sidelines. You need to build in the right way. And so my last message would be like, try to build on open networks. Try to build on networks that I think will change the system rather than just recreate, a different walled garden.
I like it. Well, Christian, thank you again for your time. This has been an awesome conversation.
Thank you so much for having me.